Hello everyone and welcome to the Chart of the Week. In the financial markets, there's always the expectations about companies performing well, and of course as investors you want to buy into those companies with the expectation that you'll reap the rewards from their performance down the road. But some of these valuations have gotten completely out of line and maybe out of touch with reality. So that's why I decided to do today's Chart of the Week on something just a little bit different. I'm calling it the market cap battle, and it's between three behemoths. And initially this was supposed to be just between Tesla and Exxon Mobile, but I added in Toyota just to add some flair to the numbers. So let me start by showing you just the market cap of Exxon Mobile versus Tesla. This is something that just recently changed, and I think it's fairly dramatic. We'll start with the market capitalization for Exxon Mobile. Now, Exxon Mobile has been a bellwether of the financial markets for a very, very long period of time. Now what we're looking at here is from 2011 through 2020, and you can see that really for the last year or so, it has certainly had a fairly sharp decline, but it still has a market capitalization of $185 billion. For those that don't know what market capitalization is, you simply take the number of shares that are outstanding and you times that by the share price. A very simple calculation. Now, what's interesting is how quickly there's been this rise to power of Tesla. Here is the chart of Tesla. And you can see that in 2011, no market cap at all, and slowly building, and recently a huge surge in its market capitalization, and all of a sudden now we see that with a market capitalization here of 1.99 billion, but I do believe that as of current price traded on Friday, it's actually over $200 billion market cap. Now that's a pretty amazing amount. Certainly Elon Musk has been a master at creating interest in his company with his flamboyantness and just his crazy statements that he makes, but also delivering on a lot of promises, and that has given people the confidence to buy into it. But is it a little bit overdone? Have things gotten a little bit out of line? I mean, keep in mind, this is Exxon Mobil, where you find just about everywhere in the world. Tesla, you don't really find everywhere in the world yet. It's that expectation. So let's go further and show you a very interesting comparison that I like to do when I look at companies dealing with market capitalization. Here are three companies: Tesla, Exxon Mobil, and Toyota Motors. Of course, may as well have some apples to apples in there because Toyota is in the vehicle space as well as electric vehicles. Notice the huge discrepancy here in the number of shares outstanding. Tesla only has 185 million, whereas Exxon Mobil has 4.2 billion, and Toyota with 1.38 billion. I also have the current share prices there. As of Friday's close, Tesla was trading at $1,208, Exxon Mobil at $44, and Toyota at $126. Also, I decided it would be important, just to put this in perspective, to look at the earnings per share. You notice Tesla is losing 81 cents per share. Exxon Mobil is making $2.66 per share, and Toyota a whopping $16.36 per share. That's a pretty interesting number, because if you're buying a company, you're obviously looking for a company that's got earnings and has growth potential. Well, maybe Toyota's a mature company, but still earning $16.36 a share is pretty good, especially if you're a shareholder. There's also dividends, and there's also a yield that they're paying. I believe Toyota is paying a dividend that gives you a yield of about 3%, if I'm not mistaken. I believe it's about 3.2% dividend. So you're getting money on top of that earnings per share. But when you look at the Tesla numbers, not only are we losing money per share, but you're not getting any dividend either. So why is it so popular? Why is it so inflated? Well, it's the expectation that maybe Tesla will be the dominant brand taking over the world. Personally, I think it's a little bit overinflated. And of course, that table that I show you is a little bit skewed because it's basing everything off of different share amounts. So what if we were to back down ExxonMobil and Toyota's numbers so that all three companies had the exact same amount of shares, 185,480,000 shares? So let's do that. Let's just take a peek at what this might look like if they were all created equal. And what's going to happen is your share price is going to change as well as your earnings per share because it's based off of market capitalization. So if we move forward and show you those numbers, now they all have the same amount of shares. And notice the share prices are very different. ExxonMobil would theoretically now be trading at $1,005 and Toyota Motors at $940 per share. Here's where it gets very interesting in the earnings per share. ExxonMobil would be earning $60.66 if it only had 185 million shares, and Toyota $121.72 per share. To me, this is extremely interesting because adjusted for shares, Toyota is the way to go. Toyota looks very undervalued. Keep in mind that Toyota last year in 2019 sold 8.8 million units, 8.8 million cars. That's why it's delivering such amazing rate of return and giving you such a good share price payment, or such a good earnings per share payment, excuse me. Put that in contrast with Tesla, which only made 365,000 vehicles last year. 365,000 versus 8.8 million. Who's the more established car company? Now, that said, who might have more potential for growth here certainly would be Tesla, because they're the new dog. They're also a crowd favorite, and they're starting to expand more around the world. But to me, that chart of the week, it's important to see that all of a sudden we've had these very historic legacy companies like Exxon Mobile, who have been producing for year after year after year, not only with earnings per share, but also with dividends. And Toyota, same thing. And all of a sudden, here's a company that's not giving any money, not making any money, and it's not paying any dividends. Yet it is the darling stock that has a bigger market capitalization than Exxon Mobil and Toyota. Makes you scratch your head and wonder, why are people buying into it? To me, at some point, I think that house of cards will come down. Not that Tesla's a bad company. I think there's a lot of potential in Tesla. But does it warrant having a market capitalization bigger than Exxon Mobil or Toyota? That's up for you to decide. And that, my friends, is your chart of the week. If you'd like to learn more, visit TraderMerlin.com or join us live on our show every day, Monday through Friday at 2 p.m. Pacific on YouTube.